Howdy folks, welcome to the Daily Coin. My name is Rory and today is Wednesday, October the 11th, 2017. And I have the very distinct honor and great pleasure of welcoming back to the show Mr. Louis Cammarosano, whose work you can find over at smallgold.com. Louis, welcome back.
How are you, Rory?
I'm doing all right. And I wanted to mention real quick before we get into the show, you have a silver report. Why don't you give people a quick rundown on your silver report?
Oh, okay. So every year I produce a silver report, which goes through all the supply and demand and uses of silver to try to get an understanding of the market. And I go through not just the numbers from the mint, but the numbers for the demand and the numbers that go into India, to China, for solar panels, for electronics, and try to make sense of those. I also then try to make sense of the supply side, looking at the mining numbers, and then trying to figure out why we have this ridiculous deficit in silver. This year, rather than making it public, it takes me weeks to put together. I put together a paid silver report for $15, $20. I don't recall the details on the price right now. But what it does is it gives you a nice, I think it's 40, 50 pages of data, charts, and also it comes with 4 companion videos so you can go through the document itself. And if you have any questions, then I'm always available.
It's a great report. I can vouch for that. It's far superior to what the Silver Institute puts out, and we're going to be talking about a little bit about what the Silver Institute's nonsense is, and this is a much more reality-based and gives you a very broad picture of the silver market as a whole. So I would encourage everyone to check that out, and that's at smallgold.com. So let's get into the show.
Let's do it.
It's ridiculous. It makes no sense whatsoever that the Silver Institute, who is supposed to be the voice for the silver world, they're supposed to be at the top of the heap, and they produce a paper year after year after year. And since 2007, we documented that there is 2 billion ounce minimum of a 2 billion ounce shortage.
100 million here, 100 million next year.
Yeah, after a while, you're talking about real ounces.
Right. And the thing is, it's not like the silver market is 3 trillion ounces.
Right.
100 million is an eighth. If you like miscalculated by an eighth on your tax return, by an eighth on paying somebody, it's a big deal.
It's a big deal.
It's not like a rounding error.
Right. Exactly. Well, let's talk about some mint numbers as far as what the mints are producing, what they're selling, what they're not selling, who's buying, why they're buying.
All right. So, Rory, what has happened in this physical retail market, which we got to start at the beginning and mention that the amount of gold that the U.S. Mint sells to retail customers, the amount of gold that the purse mint sells to retail customers is really de minimis, and it's only reflective of, I would say, investor sentiment. Would you agree with that?
I would agree wholeheartedly that it's a direct reflection of how people feel about gold and silver.
Right. So we saw in 1999, and I've sent you the charts in this, right? In 1999, when people were worried about Y2K,
yep,
the gold sales at the U.S. Mint spiked. The silver somewhat, but back then gold was the go-to metal that people wanted to have when they felt insecure. And that's still the case, even though the media tries to tell you that's not the case. Now, what's happened over the last few years is in 2008, when the financial crisis hit, we did see that huge spike in gold sales. And then as 2008 and 2009 moved on, there became a big interest in silver. Silver did not really hit its stride in terms of U.S. mint sales until 2015. It had progressively moved up into the 40, 42, 44, and finally topped out at 47 million. Gold sales were suffered after 2009, 2010. They kind of fell off at the U.S. Mint as people started moving more money into silver. It was deemed the undervalued metal, and more money moved into silver. 2016, we saw a bit of a reversal in that. We saw the strong first half of the year in 2016 in silver, and gold picked up and had a very strong year. I think it was the strongest since 2010. And silver had a very bad second half of the year and only sold 36 million. This year, what we've seen, we saw the beginning of the year start out just like 2016, pretty strong. And then we got progressively lower and lower and lower in both gold and silver, with actually gold sales suffering the most, but silver sales have not been that good either.
But they always, just as a side note, January is always one of the strongest months for every year, for each year. So,
and the reason for that is the dealers have sold out, if they've managed their inventory properly, have sold out the 2016 or the prior year coins, and now they're stocking up in anticipation for basically, they use last year as a guide. They say, I bought this much last year, let me buy this much this year. And so the January numbers are strong, but then we saw with both silver and gold, they dropped off in February, which meant the sales to the authorized purchasers fell off because they knew that they weren't getting the requests and the demand from their retail customers. And I say retail customers, I mean the other bullion dealers that then sell at retail to us. So
right. People like SD Bullion and the others.
Right. They're not authorized purchasers. They buy from the authorized purchasers. And the authorized purchasers base what they're going to request from the U.S. Mint based on what SD Bullion, BJSC, JM Bullion, what those guys say their demand is. And the demand hasn't been there. But the most fascinating thing about this is, while we've had almost an apocalypse in sales, especially in gold at the U.S. Mint, but clearly in silver as well, the Perth Mint, which is it's a regional mint. It's not the mint of Australia. It's the mint that it's a refiner. It's a strong mint, but it's always sold far less gold and far less silver than the U.S. Mint. So the Perth Mint sales this year in 2017 are really not remarkable in the sense that they haven't fallen that much. But what is remarkable is that the U.S. Mint sales have fallen so far in gold and so far in silver that for the past 8 months, the Perth Mint has actually outsold the U.S. Mint in gold. Now, and of the last 2 of the past 8 months, the Perth Mint has outsold the U.S. Mint in silver.
That's incredible. Seriously, that's
totally incredible. And you've seen the charts where the Perth Mint is outpacing the U.S. Mint, and it's not because, as I mentioned, the Perth Mint isn't going gangbusters. They're just not going broke. I mean, they're selling what you would expect in this market. Maybe I'm not shocked that the Perth Mint sales are slightly down, slightly up another month. What I'm shocked about is that the U.S. gold sales, especially, are close to non-existent, and some of the months they've had are the lowest August or September in 17 years. Now, some have pointed out that this is kind of the calm before the storm. People feel comfortable. And yes, it's true that sales were very low in 2007. They were very low. And sales in 2008 were very low the first 4 or 5 months until people started to see the storm clouds on the horizon. Now, this is where I want to get your idea. Is it a function of people feeling comfortable, or is it a function of people chasing other assets? Why the gold sales in the United States and the silver sales are far below where they are at 10, 15-year lows?
I think that it's a combination of several factors. One being that people are chasing other assets like cryptocurrencies. The other being people are broke. The economy, as we've discussed endlessly, is falling off a cliff, and all of the economic factors that we have discussed over the past 2 years are now catching up. They're all coming to people's dinner table, if you will. Mm-hmm. They're in their home. All the inflation is now in people's house. It's in their wallet. So they can't. So there isn't any extra. And if they're what little bit extra that they have goes into another asset, then that's going to affect what's happening with gold and silver. Also, the third factor is exactly what you said. People have been lulled to sleep that, well, Trump's been elected, things are going to get better, everything is rosy. No, nothing's changed. Nothing has changed. Nothing has been fixed. Everything is still broken. Everything is still a disaster.
I'd agree. I'd say that the economic, and I was talking about this earlier today, is the economic situation really hasn't changed much. That you did see that 3.2% GDP growth, but well, exactly. But the point is, all the other numbers and the feel is this is still the Obama economy, irrespective of how high the stock market goes. It's not like it's been changed. But as to people being too broke, I guess you're right. It's two-part. You're too broke to buy gold, silver, and cryptocurrencies because people were buying even, it's not like the economy was better in 10, 11, 12, 13, 14, 15, 16 when the silver sales are way higher. They didn't all of a sudden become broke this year. What I think happened is, yes, some people threw in the towel. I think partially also not because they're satisfied with Trump. They either have enough or they're throwing the towel in that the price has not risen during this entire time when every other asset, forget cryptocurrencies, because they were a non-event 3 or 4 years ago for most people. All assets have risen except gold and silver. So I think that's making it harder for new investors to come in and say, yeah, I want to take a flyer on this, when you would think the time to buy any asset is when it hasn't gone up for 7 or 8 years.
Right. When there's blood in the street. That's
right.
That's when it's hated. That's when you load up.
I mean, all these people that talk about cycles, you'd say, okay. I mean, unless you, and the other thing that sometimes people say is, well, that's because they're now dead assets. No one wants them anymore. And there's always been, I remember 1979, it was called the death of equities. Actually thought that because stocks had gone down for 7 or 8 years in the 70s, that people were no longer going to buy stocks. Well, we've seen how that's turned out. I think that article was the end of the bear market, that we've now seen the bull market for about 35 years in stock. So I wouldn't write off any asset class. And I think we're just seeing these numbers and they don't mean anything. They don't impact the gold or silver market. You mentioned on our last call that the amount of gold that the U.S. Mint sells is, half an hour's worth of trading, even of physical gold. I'm not even talking about COMEX trading. I mean, they might sell. I mean, this year the U.S. Mint is only sold 171,000 ounces of 1 ounce American Gold Eagle coins.
That's nothing.
I'm going to report tomorrow on Kazakhstan, which is one of the largest powerhouse countries in the world. They just picked up 150,000 ounces just for their account in August. That's just one country. So basically, one small country adding it every month is what the United States' entire retail demand did all year. And Russia picks up 500,000 ounces every month or so. Sometimes 300, sometimes 700,000. And that's just one country, and the amount of gold that goes into Shanghai. You get the point that what the United States Mint sells is not significant. But when it's this low, it's only significant in that it's so insignificant.
Well, and not only is it so low that it's insignificant, it once again points out all of these factors that we were just discussing. All of those factors now become glaring, and I respectfully disagree with people being as broke today as they were between 2010 and 2016. I mean,
they're broke.
I think that things are a lot worse. I think that, like I said, inflation.
Cumulative.
No, well, you have that, and then you have the fact that there hasn't been any improvement except inflation. Inflation is raging. Inflation is going to get a lot worse. I went to, I had a medical emergency a couple months ago. I haven't discussed this. I have barely discussed it in private, much less public. That this event, which was a non-event, come to find out, thank goodness, it cost $8,000 for me to go to the emergency room by way of an ambulance.
Mm-hmm.
I was in the emergency room for 5 hours. This 5 hour plus the ride in an ambulance was $8,000. Thank goodness I have insurance, and it covered most of it. It didn't cover all of it, just barely half, because insurance today sucks.
Yep, well, the deductibles are far, far higher now.
It's unbelievable.
Your premiums are higher.
But my point is that when you have these, when you didn't have that back in 2010, 2015, you didn't have that going on. You do today. And that's just one tiny example of the difference of what I'm talking about. I'm not saying that everybody out there, went to the hospital or had this medical situation, but I guarantee you a significant number of them did. I guarantee you that people's insurance premiums are impacting their ability to acquire more gold and more silver, their ability to acquire more food, much less more gold and silver. So when I say that the economy has gotten a lot worse in 2017, that we have quantifiable evidence of that we can say, yes, this is now a problem, because the Obamacare nightmare really was unfolded in 2016. That's when it came to our living room, was in 2016, and that's when gold and silver really started tanking, and now we see more of that happening. So the economy as a whole is a lot worse today than it was even as soon as 2015. It's a lot worse. It's not just worse, it's a lot worse because of these things. And that's just one piece of it. So so that's why, like I said, I respectfully disagree that 2010 to 2015 in particular, people had more money. They don't have that. They don't have that today.
What about the people that had no money in 2014, bought cryptos in 2015, now have money? I don't see. I saw Peter Schiff debating Max Kaiser.
Yes.
And Peter Schiff said, he's at a crowd that's all crypto bugs, and he said, "Look, why don't you take some of that money that you've made? He says, if I'm right, and put it into gold, put it into silver." You aren't seeing that, I don't think. No. And a lot of the companies like Provident Metals and a few others, I think even Schiff's and Gold Money too, they'll accept eventually a Sharps Pixley will accept those cryptocurrencies in exchange for gold. What's interesting, Max Kaiser, what he should have said was, well, Peter, how about if we're right? Why don't you buy a small amount of cryptocurrency as a hedge? But we're not seeing that crossover. It seems that the gold crowd and the silver crowd has lost some to crypto, but they haven't gained any of it back, at least not yet. And I don't think they will, because if you see a big drop in the cryptos, well, then they won't have the money to buy the gold, and they'll be just as poor as they were before.
Going into it, right?
So that's not a very positive. I don't think people will give up on the crypto story, give up on the idea that it's still early, it's going up, unless it collapses. But if it collapses, that's of no help either to the gold or silver sales.
Right. Well, but it will, because if the crypto market does collapse, then people will come back to gold and silver. I think that a lot of them have left. I really do, and I think that that's directly reflected in that 30% drop that you were just talking about as far as the Perth Mint. I mean, and it's interesting that the Perth Mint is outselling the U.S. Mint for the past several months, and that's, in my opinion, that's a direct reflection of the Eastern world still having disposable income where the Western world doesn't, and because the Perth Mint, a lot of their sales go directly into China and India and Russia and all of the McKenna's heartland, into those smaller countries, into South Korea and Vietnam and all of those countries. That's where their sales are going. And that's, in my opinion, that's what is supporting those numbers for the Perth Mint, because they're not buying eagles. And why would you buy an eagle when it's the same coin since 1986? When you can get a kook or a kangaroo that they're now changing year after year, where you can get, a koala or the lunar series, or you've got all of these different types of coins that change every year, where you've got these beautiful, beautiful designs. I mean, my goodness, they just released the Year of the Dog. I mean, those coins are awesome.
But that's always been the case. I mean, the Perth Mint, we've talked about that. Even the Canadian Mint has always done something extra special for collectors by even the colorized coins, the different versions, the limited editions. But for most people who buy silver, it's for the bullion value. It's the idea that they're going to save in bullion. And I think what's happening at the Perth Mint, actually, someone left a comment on one of my YouTubes. He said he visited the Perth Mint, and he said most of the people in the shop itself were from Southeast Asia. So I think they sell a lot. They sell a lot. Now, remember, Perth Mint sells tons of gold to China, but that's not included in these numbers. These are the retail coins that you're mentioning. And I'm sure that these numbers, these higher Perth Mint numbers than U.S., and I should confirm this with some of the bullion dealers in America, I don't think they're selling. I don't think the U.S. bullion dealers, and I'll try to confirm this, you can confirm it with the doc, I don't think they're selling more Perth Mint products today to United States customers than they are Silver Eagles. I think the Perth Mint is selling more outside the United States. Yes. I would guess. Yeah. Okay. So it's like the Perth Mint isn't going gangbusters in the U.S. and no one wants to buy the Eagle anymore. I would guess that the doc is selling more Eagles still, even despite the fact that the Perth Mint coins might be better looking. And remember, some people, despite the Perth Mint, despite the Canadian Mint having better designs, don't want to buy a coin where the flip side has a queen on it.
I understand all of that. What I was saying is that the U.S. Mint, which is U.S. centric, that's their base.
Right.
Versus the Perth Mint.
Yes, which is more global.
Right. Not only more global, but more Eastern. That's their base. Like you said, Southeast Asia, Pacific Rim countries that I was just talking about. They still have money. They're still buying.
Yeah.
Whereas Americans aren't. And as far as I do need to confirm that with
rich Americans? Yeah, that would be a nice thing to do but what about rich Americans who traditionally would be more likely to buy gold? Is that a comfort issue? Because it's not like they don't have money. I mean, all these people who make money in real estate, crypto millionaire, or don't forget crypto, just normal rich people that have money, you would think you'd sell more than 1,500 gold buffaloes. You think you'd sell more. I mean, you're talking about numbers that are so small as not just to be insignificant, to be as you might as well not bother.
Well, if you're talking about wealthy people, they're probably buying, ETFs. Kilo bars of gold.
Yeah.
They're probably not going to be fooling with a buffalo or an eagle, either gold or silver. They're going to be, getting a 100-ounce Engelhard or silver bar or whatever. They're not going to be fooling with those items. And and that would be interesting. I do need to follow up with Doc and find out, what's happening with their sales as far as how that's breaking out, because that would be very interesting to know, because it is the Perth Mint right now, like you said, Lewis, they're blowing out the U.S. Mint, and they shouldn't be.
No, they should. They've never have. They've always been far smaller. The most silver eagles they've ever sold in a month, and the only reason they sold 3.5 million ounces of silver in September 2015 was because the U.S. Mint and the Canadian Mint were out, and so they introduced the kangaroo. Silver kangaroo, the bullion coin, and then of course that gave them a type of coin that they can sell that isn't a limited edition of coin like the koala, the kookaburra, or all the privy marks or the lunar years, whatever they put out. That was a coin that they could sell as much as they had silver demand. Now, that's raised their average monthly from a couple 100,000 a month to 5, 6, 7, 8, 900,000 a month, sometimes over $1 million a month, but they've never hit the 3.5. After that 3.5, they've never even done 2 million. But the U.S. Mint routinely, after September 2015, would bang out 4 million a month, while the Perth Mint was doing 1 million. So it's always been a 4-to-1. And now the Perth Mint is outselling the U.S. Mint.
They're outselling about 2-to-1, right?
Yeah, but it's not. Yeah, but it's not because they're selling 4 million now. The U.S. Mint is selling 2 million. It's because the Perth Mint sold 692,000 ounces in September, and the U.S. Mint only sold 225,000, which is like a number that the Perth Mint used to sell before they introduced the silver kangaroo.
It's incredible.
It's the U.S. drop, but I guess, and I do want to find out what the U.S. dealers are selling in Perth Mint. I doubt that the Perth Mint is outselling the U.S. Mint coins in the United States 2-to-1. No. I would guess the number is still just the way it always was. They're selling more silver eagles, which is few, and even fewer Perth Mint silver.
Yes, I would agree with that.
But let's get confirmation on that.
Yeah, I'll try to set something up with Doc in the next week or so. See if he can join us.
The thing I did send to the Silver Institute was the big year in 2015. They showed the massive increase in sovereign mint sales, like it had doubled. And then I don't know what they did. They just made an assumption that the silver rounds and bars were about the same as they were the year before. And I said, whoa, that can't be. Because I know for a fact that when the U.S. Mint and the Canadian Mint, everybody was having trouble meeting demand, people were buying from the Sunshine Mint, the rounds and bars, and they did go back. But then again, it was interesting. They just went back and adjusted their number about 60% higher. I'm thinking, oh, okay, so that's the methodology? Because I assumed that number was no way could that number be right, that they had the same number as the year before, when we knew that if sovereign mint demand had risen a large amount, well then, why wouldn't the rounds also increase, especially since the sovereign mints were closed for a period of time, giving the rounds and bar market open playing field.
And you couldn't get Sunshine Mint products.
Even then, exactly.
They sold out as well. They were running about a 4 to 6 week delay, if I remember correctly. So, yeah, once again, the voice of the silver world, Silver Institute, nonsense, nothing but nonsense. Anyway. But where do we go from here, Lewis?
We have no control over anything. I have no control over the price. I have no control over the sales. We can only look at and think about what it means. And my guess is this year The bright side, I suppose, is if you're collecting the U.S. Mint coins, including the America the Beautiful, including the gold eagles, including the gold buffaloes, you're going to buy a low mintage coin, and in some instances, there'll be key dates. In some instances, there'll be the lowest mintage or equal to the lowest mintage, and you may get a premium if that's what you're looking for. But as to full-scale interest in the precious metals, unfortunately, when you see they say people are buying gold, they are going into the ETF markets. They're not going to gold money as much, I don't think. They're not going to the private vaulting systems where you arrange to have your gold or silver stored. They're just saying, I don't need to bother with that, storage fees and everything. They can hold on to it at the ETF, and I'm fine with it, and I can trade it when I feel like it. And that, unfortunately, has made it a financial product, and it doesn't serve the purpose of insurance, because when they close the markets on the weekend or just because they close at 4 o'clock, your insurance is gone because you can't do anything about. And then if it closes for a market reason, like a crisis, you have no access to your insurance either. So when you have your stuff at gold money or an insured, vaulted account, you have it outside the banking system. But they've convinced people that you just need to buy an ETF. And I saw that article on Germany. They were bragging about how the Germans are the largest gold buyers in the world now. No, they're not. They're buying what they call their exchange-traded commodity funds, ETCs. So that's where I think we go. I think we're moving, just like with the cryptos, we're moving further and further into digitization and paper gold. Now, the good thing is I think that gold money, though, while it's digitized, and if you can believe and trust what they say, which I have no reason not to, you at least have your stuff stored there, it's insured there, and you can deal with it digitally.
Yeah, you have access to it 24/7.
Correct.
Unlike what you were saying, the ETFs or the ETCs out of Germany, you have no access to them when those markets are closed. And if they decide to close the market because I said so, then there you have it. You don't have access to anything.
Also, if you have a problem with the ETF, you have a claim on the company, and they could say, sorry, all gone, nothing here to see. Whereas gold money, it's set up where you have a claim on, that's not their money, that's your allocated portion. Right. Same with when you buy an allocated gold storage. That's your gold. It's not
your gold.
So you don't have the problem with the ETF is, and everyone who's gone through the ETF, it's designed to give you exposure to the price of gold, which in my mind, I don't want exposure to the price of gold because it doesn't really go up that much. If I want to speculate in digital assets or stocks, I want something that goes up and down a lot.
Yeah, something
if I want moves. Gold, I don't want an ETF. I want gold. I want to store it and have it there so you know that it's there, because you buy it for a crisis. You don't buy it so that it's going to skyrocket. That's just my view, and I think in a world where it does skyrocket, that's where you won't be able to get at it because it's in an ETF and the market is closed.
Right, and you don't have anything in the first place except a promise
or a price, which you can't execute on because the market's closed.
Yeah, good luck with that. I'll take physical in my hand any day.
Or you buy a stock. I mean, if you're going to play, you might as well buy a stock that could go up by 2 or 3 times. You might as well buy a cryptocurrency that can triple or quadruple than buying an ETF, because you're not getting the value of gold, the purpose of it as insurance, and you're not getting the upside.
Yeah. I don't want anything to do with them. Nothing. Just like I said, give me physical gold, give me physical silver, and I'll be perfectly happy, and life is good. So
that is not the mentality. That is not what they've managed to convince people of.
Well, I guess I'm just a rebel.
There you go. Old-fashioned.
Old-fashioned, exactly. And I like it. I like it that way. So I still believe in handshakes.
Yep. Unless you want a smart contract, you eliminate the handshake.
Well, smart contract is a digital handshake.
Yep.
But we've been speaking with Louis Cammarosano, and you can find all of Louis's great work over at smallgold.com. Louis, thank you so much, and I guess we'll talk with you in the not too distant future.
Sounds good, Rory. Thank you, everyone.